Distinguished guests, colleagues, dear participants, it is my great pleasure to welcome you on today's panel, The Future of Money in a Digital Europe, Perspective from the Central Bank Governors. I believe that we are meeting today at a time when the Europe, especially European Union, is undergoing through the process of wholesome and comprehensive change when it comes to its payment landscape. Definitely when we talk about the global trends, creation of stable coins, digital financial assets, and private digital money is a reality. In that regard, the EU is as well having an answer to this digital change. One of the most strategic changes relates to development of the digital euro. Digital euro brings with it many benefits, but creates a lot of risks. How to reconcile the speed and the needs for privacy with potential financial stability issues are all relevant questions that today's governors present at the panel will try to answer. In that regard, we may start with the Governor Müller. Thank you so much for being in Montenegro. As a governor of Eesti Pank, I believe that it is a common knowledge to consider Estonia as a country which is on the frontier when it comes to digitalization of its private and public infrastructures. From the perspective of a country that is so digitally advanced, what are your views on digital euro? Whether this is just catching up on a trend for digitalization, or whether digital euro has a deeper meaning from the perspective of monetary sovereignty?
Thank you for the question. And first of all, I would really like to thank the organizers and Irena you for inviting me here. Because it's my first time in Montenegro. It's beautiful. I am enjoying it to the fullest already. So it is my pleasure. You asked about digital euro. Maybe first I should say that I think payments in general, it's very important for the economy, how you organize the area of payments, this really being in a way, the blood flow of the economy. I think it's very important for Montenegro first that now you're in SEPA, the single euro payments area, and now TIPS with the fast payments, and then eventually digital euro as the next step, I think would be a natural development. But now about digital euro specifically, you're asking how do I view it, and if it's just a technological advancement or something more strategic. I think it's really both. Because first of all, it is a technological advancement, and I think the next natural development, if you wish, in the sort of development of money in Europe, we see that people are using less and less cash for everyday purchases. In Estonia, we have 70% of purchases done electronically, and we need the central bank still be able to provide the means of payment directly to the general public. As cash is being used less, we also have to sort of get to the next level and be able to provide, if you wish, digital cash or the central bank currency in a digital format. That this is really what the digital euro is all about. But then it's, at the same time, it's also a strategic issue for the euro area. Since we are right now in most euro area countries relying on basically American card schemes and service providers. And it is important to have one payment solution in Europe that works across all the member states and is seamless and secure and safe and cheap. And this is what it's going to be all about. So it's also about the sort of monetary independence and sovereignty. And finally, when it comes to the design of digital euro, one thing that we consider important, at least in Estonia, when we're trying to argue the benefits to our general public, is also the resilience aspect of it. Right now, we know that you can use cash in every situation. If there's a power outage or the card payments do not work. Still, cash is always something that you can pay with. In the future, when people don't use much cash anymore, we need to have something digital that works the same manner. So the idea being that with digital euro, you're also able to make offline payments if there's a problem with connectivity. And we have recent experiences showing how important it might be. About a year ago, we had big power outages in Spain, for example, where people could not make payments, the power was out. We have, in the Baltics, we have had recent incidents with the data cables being cut down by Russian, basically, ships in the Baltic Sea, creating problems. So we have to be prepared when it comes to payments for all that kind of incidents as well.
Thank you. So it really appears that the digital euro provides, I would say, a comprehensive answer to, I would say, many challenges that European market is facing in the landscape of payments. To this end, when it comes to Banka Slovenia, I would say as well that Slovenia is considered as one of very small but agile members within the Euro group. And in that aspect, definitely digital euro similarly to other countries, will bring enormous speed when it comes to execution of transactions, potentially increase the level of security and privacy, but we as a central bankers definitely always pay attention to financial stability. One of the main concerns in creation of the digital euro is that it will result in increased funding cost, potential interruptions into banking intermediation. And in that regard, we heard rumors that there will be a holding limit. Some countries are mentioning 3,000 euros. I think this is still under debate. So from the financial stability point of view, for the central banker, what is the fine line is in, I would say, balancing the need for innovation on one end, in the context of development of digital euro, and concerns related to potential financial stability repercussions.
Thank you, Zorica, and I would also like to thank organizers and my dear friend, Governor Irena Radović, for inviting me to this great event. And I'm honored to be back to Montenegro in this beautiful country. And let me emphasize that, and I want to do that really honestly, that Slovenia has always gratefully supported your country and also the region in your development, in your path to European integration, and we do as much as we can, and we do acknowledge your achievements, and we hope you will enter European Union family as soon as possible. So congratulations for that. And as regards to your question, this is actually one of the most intriguing questions that we have to face in this process of potentially introducing digital euro. We have a lot of discussion with the industry, with other partners around Europe and around the world, actually. And let me talk about that a little bit. So first of all, I would like to say that the infrastructure for digital euro is built around intermediation, not against it. This has to be clearly said, because a lot of banks are afraid that digital euro would compromise financial intermediation and so on and so on. So here there are two big players. One is the ECB, and the other part are banks, banks and supervised payment service providers. And these are two groups that need to cooperate here, and because banks and supervised PSPs are consumer-facing intermediaries, so we cannot have only one institution without another. So this is really important. So we are cooperating together. On holding limits, true, there will be a holding limit. We still don't know which one it will be. So in October last year, we published a detailed technical analysis across range of scenarios or range of limits between 500 and 3,000 euros. And I must say that under, let's say, business as usual scenario, which is likely to happen or to prevail, deposit outflows would be modest and will be likely offset by the structural shift away from physical money, as also Madis explained that in Estonia and also in Slovenia, the use of physical money is diminishing. Then we also have some other scenarios, and under highly conservative flight to heaven scenario, banks still remain resilient in terms of liquidity, and the digital euro would not harm financial stability. But holding limit is not the only safeguard. Just like cash, digital euro will bear no interest, and this is a design that is deliberately like this. So digital euro would be means of payment and not the investment opportunity. And this is really important. Of course, this analysis that we have done in October 2025 is not the last one. It was meant for the procedure in European Parliament. We will do utmost everything or everything possible to analyze the situation as much as possible, to see what are the effects, and we will of course be really transparent with that. Then we have the question on calibration of innovation and stability. I don't really think that there is, let's say, we can choose in Europe between the two. In fact, we are choosing between having public money or public interest versus seizing that space to actors outside of that. And we know that euros dollar denominated stablecoins might prevail if we do not act. And if we want to preserve our independence, we need to act accordingly. So we are confident in the ECB that well-calibrated digital euro would benefit to the European citizens and would not harm financial stability in any way.
Excellent, thank you. It is quite reassuring to see that the primary role of digital euro would be in the area to consideration to be a mean of payments rather than to, I would say, store the value, which definitely is a very important fact from the perspective of financial stability in potential wake of deposit runs. So in that aspect, it is great that you already created analysis which very transparently provides quite reassuring results in that regard. Governor Radović, digital euro is a project where I believe the Central Bank of Montenegro takes a lot of, I would say, puts a lot of investment to follow all the changes. Digital euro is far beyond its conceptual phases. The pilot project is under the way. Being a unilaterally euroized country, what is the position of the Central Bank of Montenegro and Montenegro overall when it comes to usage of digital euro across the borders of European Union, and what considerations policymakers in ECB should have from the perspective of potential early integration into the process of the countries which are catering unilateral euroization as their core monetary strategy?
Thank you, Zorica. I would first like to say that I'm delighted to be at this year's edition of the Adria Future Summit, because Biljana, as somebody who had the vision to put this fantastic framework in place 4 years ago, has actually achieved what is necessary for entire region. She managed to put together the geopolitical and geoeconomic perspective and the need to put focus on transition, digital, green, to encompass AI and to make sure that all the new technologies and all the new innovative solutions are actually put to the best of the usage and to avoid the disruptive element. And today, the fact that we are opening the summit in the era of heightened geopolitical uncertainty and geoeconomic fragmentation, in the era where multilateral frameworks are questioned and not efficient as they used to be, I have to say that there are immediate consequences, and all the current developments globally are translating in the excitement in the world of money. How and why? You have had the opportunity to listen to my colleagues who are actually running the monetary policy that we implement from the European Central Bank, Madis Müller from the Central Bank of Estonia, and Primož Dolenc, governor of the Central Bank of Slovenia. And you have heard about challenges, you have heard about voices raised against innovation, against developments in terms of potential question marks raised by the banking sector, potential question marks raised by political circles and individual users on privacy, whether online and offline mode are done in line with expectations and what is actually required. And lots of question marks have actually slowed down the decision-making process in Europe. And we have to be very much aware that despite having the right track and despite the ECB and the European Commission having the right strategic solution in place, the speed at which we are moving towards that solution is not ideal, because we have a completely changed global setting. We have a global setting where we're talking about cryptocurrencies, tokenized deposits, stable coins on the rise, again, CBDCs globally. And in this very framework, if you just compare the position across the Atlantic with the European position, you will see two completely divergent stories. You will see the US current administration pushing for the private sector-led solutions, for the rise of stablecoins, and for regulated stablecoins, which are actually supposed to have as backing assets dollar or US treasuries, and which are supposed to enable global dominance of the United States, and absolute ban on the part of authorities to the central bank to issue its own digital currency. On the other hand, in Europe, you have regulated stablecoins, regulated privately led initiatives in line with the risks that emerged. But then on the other hand, you have a very strong initiative to make sure that central bank digital currency, digital euro is put in place, and understandingly so. Madis was talking about usage of cash. It is really quite alarming when you see that from 86% in 2016, today the usage of cash in terms of value in the European Union is at the level of 39%. So again, if you have a look at only last 5 years, at European level, I'm using the EU data, we're talking about 6-fold increase of the usage of mobile applications for payments. And when it comes to e-commerce, we're talking about 3-fold increase. And again, the percentage of usage of euro is dropping. And in such conditions, clearly the cryptocurrencies, stablecoins penetrate the financial systems of European countries. And the European authorities and the European Central Bank actually has put not only the fact that it wants to increase the efficiency and to address the challenges of modern era and modern digital financial solutions, but also the key segment is actually addressing the European resilience, European monetary sovereignty, and European strategic autonomy, which means that unless the ECB puts in place the digital euro, we risk our monetary sphere of influence, European monetary sphere of influence, being dominated by not only, as Madis said, big tech platforms which are non-European and payment solutions which are not European, but also other initiatives such as US-backed stablecoins like Tether and Circle, which are already significantly present across the world. So in this effort, I said at the beginning that we are rather slow. We are slow because the solution was devised in 23, it has been in the parliament for 3 years, and it is only in 2026 that the solution is being sped up. And it is only in 2026 that we can talk about potentially the legal solution being in place at the end of the year, the pilot starting in 2027, and the full rollout of the digital euro being in place in 2029. Now, what is Montenegro doing and where does Montenegro stand? Montenegro is the longest standing negotiating candidate country on the European continent, and I had the privilege of being among the team which was involved in drafting the Stabilization and Association Agreement with the European Union in 2007. So today I can say that the current administration run by Prime Minister Spajic is actually aiming high and working very diligently to close the accession negotiations by the end of this year and to enable the signature on the Treaty on Accession to the European Union, which is already in the process of being drafted, as soon as possible, and hopefully in the Q1 of next year, so that after the process of ratification by the EU member states, Montenegro can actually become a fully fledged member state, hopefully in 28. Now, in this particular framework, when you look at where Montenegro stands with regard to the digital euro, I can address it from the legal perspective, but I can also address it, and I will address it from the practical perspective. From the legal perspective, the current legislation which is being devised by the European Parliament, which is being discussed and contemplated by the European Parliament, provides for two opportunities. And depending on where Montenegro stands at the moment when the rollout is in place, we will fall under one of these two categories. The first category is actually the applicability of the digital euro in EU member state, which is not part of the euro system. And I have to say that due to historical circumstances of the dissolution of former Yugoslavia, Montenegro started using the Deutschmark in the 90s, and it has been using the euro as the sole legal tender for 26 years already. So basically, in this framework, we are not sitting in the euro system, we are not having decision-making power, but then again, we are using the European currency, and in this particular framework, if Montenegro at the stage of rollout is fully fledged member of the European Union, then the ECB would sign an agreement, monetary arrangement with the Central Bank of Montenegro, and the rollout would actually be done via intermediaries. But then, on the other hand, those countries that remain outside the European Union, and some of them also use the euro, would not have this chance. Basically, this would need to be preceded by political arrangement between the Commission and the country with full supervisory, regulatory and information sharing arrangements in place, and later on with the steps that I've just described. So again, where is Montenegro and where is Montenegrin Central Bank with this regard? I have to say that we are very ambitious. We are using very well the new growth plan for the Western Balkans, which has devised the possibility for accession countries to become part of the single European market before EU accession. So basically, we were the first country that actually undertook the application process of applying to become integrated in the single euro payment area, which we became in 2024. Already from October last year, we are fully integrated in terms of payments and fully interoperable with 41 states of the European Union and its neighborhood, which are part of this initiative. Again, we are running and overcoming additional hurdles, putting new modernized payment systems, and now in July, we are going to integrate the instant payments of the European framework under the ECB, which is the framework of the Target Instant Payment System, TIPS clone. And again, we are going to provide additional layer of certainty and modernization of Montenegrin payment system. And when it comes to digital euro, we are already exchanging with Eurosystem central banks. Our teams, our IT teams, legal teams, payments teams are already being trained. We are exchanging experiences and putting in place all the prerequisites to make sure that Montenegrin businesses and Montenegrin households can have recourse to the digital euro at the time of the rollout. So again, when we are talking about Europe and what the goal is for the foreseeable future in view of geopolitical shifts and geoeconomic shifts, I have to say that Montenegro is one of the countries which is in the accession pipeline. There are currently 9 countries, and with Iceland having the referendum on the accession, on the possibility of acceding to the European Union and renewing negotiations in August, we expect that there'll be already 10 countries in the pipeline, and with these 10 countries in the pipeline, we are talking about expansion of the single European market by 60 million people, which is something which tells us that the entire layer of European monetary integration and payments infrastructure integration ahead of accession, which we're talking about, is part of a stronger convergence and cohesion project for the European Union, where everybody is on the win-win side. And I wouldn't like to dwell too much on this segment because I'm sure that Zorica will raise it. But then again, from this particular angle, I'm absolutely convinced that the European Commission and the European Central Bank will have a very proactive and very open approach in the years to come following the rollout to make sure that the international role of the euro is cemented and the strategic and monetary autonomy of Europe is increased, because the ambition is not only to use the digital euro in Europe and European continent, but to make it global.
Thank you. Thank you for this insightful view. So to sum it up, we have answered the question on, I would say, the essence and motivation for the digital euro, the potential impact on financial stability, and the position of those who are aspiring to enter into Eurozone and to cater and use digital euro, and already start integrating at this stage with I would say, the most prominent payment infrastructures. I believe that fourth element relates to privacy versus security and versus financial integration. In that regard, one of, I would say, very prominent characteristics of cash is assurance of privacy, while in the same vein, digital euro, through its offline plans and offline mode, is aimed to do the similar thing, to provide the similar user experience in that regard. So from the perspective of the current development of digital euro, we would really appreciate your views how it is possible to assure, on one hand, privacy of the users while assuring integrity of financial market.
Well, privacy and security both are absolutely critical when it comes to digital payments, digital euro. I'm looking at the watch. I could talk about it for long, but I have to be short. But first, looking still at the audience, I realized we're talking about all those technical aspects of digital euro and the legal questions around its implementation. I'm not sure if everyone who is not dealing with those topics on a daily basis really knows exactly what we're talking about to start with. So I'll just take 30 seconds to explain that the way that digital euro would really work, it is that you would have a digital wallet in your phone, and you could do electronic payments just as conveniently like today. You could really pay by phone, but in the background, what is happening is really that effectively we're using MasterCard or Visa infrastructure, and it's really based on cards, and there are extra fees and costs related to that. So digital euro would basically be the European system, European technology, where there's no card scheme involved in the background. Similar in a way, if you wish, you have the private sector solutions like stablecoins that Irena was talking about, or Bitcoin and those crypto assets, but this would be really central bank issued official money with several benefits that come with it, just in a digital format. And now when it comes to privacy, then there's this concept of privacy by design. So the way that the technology and infrastructure is set up is that the central bank or the government, they will not be able to see, not able to link the actual money being used to the particular person. So there is privacy by design in that sense. There's also the question of how are we able to ensure that all the money laundering, anti-money laundering principles are followed. And the way this is handled is that all the customers, they are in a way onboarded by official financial institutions, banks. So you would have your bank account and then you would be able to link it to your digital wallet. So all those background checks and know your customer principles are followed by the bank that you're using. And finally, when it comes to offline payments, first of all, there will be some limits on how much you can really use the digital euro offline. It's mostly for those lower value transactions in emergency situations where the normal payment system does not work. There will be advanced cryptographic solutions to ensure the security of the transactions. And in a way, it's really similar to cash. You can, of course, anonymously also pay cash to your friend and no one will know about it. And it's just going to be similar with euros, so digital euros. So in that sense, that's not really so different from what we have today.
Yes. Indeed, thank you so much for, I would say, a very thorough, succinct, but very thorough clarification on, I would say, the feature of the security and privacy in design of the digital euro. With Governor Dolenc, we talked about digital euro from the perspective of its potential to be, I would say, the final layer of settlement when it comes to the payment ecosystem of the European Union. In the same vein, there are many commercial initiatives such as Vero happening in parallel. So in that aspect, given that we have the fact that in the case of Slovenia, I believe in your constitution as of this year, cash payments are considered legal under the constitution. So in that aspect, I would say that cash payments will be definitely the part of the payment ecosystem. From the perspective of digital euro and EPI initiative, we would really like to have your insight on whether you consider it as, I would say, substitutes or that they have a synergetic potential.
Well, I would say that, or I truly believe that digital euro is not in any way a substitute, but it complements the existing digital payment infrastructure that we have in Europe already. So this infrastructure now is well developed, really sophisticated and also efficient, as you might have observed since Montenegro has joined SEPA. So it's fast, it's cheap, and it's efficient. Of course, we have different payment systems in Europe. We have private, we have also public. For example, tips was mentioned, so instant payments, which is quite effective, and we extended its reach also beyond European Union or European Monetary Union. So we have these interlinkages with other countries and so on and so on. And we do not see this as I said before, as competitors to digital euro, but a complementary infrastructure. So digital euro is only one part in this infrastructure. But still, there are some features that digital euro distincts itself from others, and this is the digital euro contributes at its retail end as compared to tips and other options. So it's universally accessible. It's a sovereign. It's privacy preserved, as Madis explained, means of payment. It's a public good. It's a public money. and it has common standard for everybody in euro area. And actually no existing payment option does everything. So TIPS, for example, is a wholesale and interbank settlement system. Then we have private schemes that lack universality and public anchor. Cash, in a way, cannot operate in digital environment. And then we have, as Madis rightly explained, all the issues with card transactions, which are not European owned or European governed. And here we have some risks which are increasing due to geopolitical tensions and so on. So digital euro is, let's say, designed to be foundational element of our payments, sovereign, more integrated payments in Europe. We are not replacing any of the existing platforms, neither private or public, but we are adding to that.
Thank you for your insightful perspective. So, as a final question to Governor Radović, given that we observe all these wonderful initiatives, EPI, Vero, Digital Euro, mandatory instant payment in SCT scheme, whether the EU can afford that these initiatives stay in the borders of European Union, or they should consider sharing those platforms and initiatives with the countries who are aspiring to enter into the EU from the perspective of, I would say, mutual gains?
Thank you, Zorica. I believe that the answer is no, absolutely not. And we can already see the shift on the mindset in the European Union and also at the level of the regulator. We have to know that every modernization and every innovation in financial system does bring its risks. And normally, regulators and supervisors like us are there to contemplate the risks, but we also should not let the opportunities go by. And in this particular segment, starting from SEPA, instant payments through TIPS, pan-European solutions like European Payments Initiative such as Vero, which is currently being implemented in a number of EU member states and which we will welcome gladly in Montenegro, DLT-based settlement systems, digital euro, all these are components which are layers of the European monetary and European financial integration. And in this particular regard, keeping the countries which are Euroized or keeping the countries which are in the process of accession out is not actually working in favor of anybody because that would actually go against the competitiveness attempt to increase competitiveness of the European Union and Europe as a whole, because companies functioning within the digital euro framework or EPI framework, Vero framework, would actually have comparative advantage, and there would be a gap with companies which they're working closely with from the adjacent neighboring jurisdictions of the European Union in terms of making sure that payments are as fast and cheap and efficient as they are in the European Union. And this is what should be seen through the lens of Montenegro, because if you have a look at what happened since the last year when we integrated the European financial ecosystem through SEPA, the cost of individual transaction towards 40 countries of Europe was through SWIFT at the level of 74 euros. Today, we're talking about costs between 0 to 2 euros, depending on whether the transaction is up to 200 or 20,000 euros. And this is a huge leap forward. And this is, as I said already, a leap forward not only for those jurisdictions that are actually acceding, not for Montenegro, North Macedonia, very soon Serbia, Albania, Moldova. Again, very soon we hope the rest of the region and the eastern neighborhood. But it's also a huge leap for the European Union in terms of increasing its own competitiveness and economic prosperity. And what I would like to say is that should it go in a different direction, one would risk having a multi-speed payments and financial infrastructure in Europe, which wouldn't actually bring about the cohesion which is required. The second thing, what is being addressed right now in terms of making sure that capital markets union is completed, banking union is completed, payments infrastructure is finalized and completed. Any attempt to keep other countries out would actually lead to fragmentation rather than cohesion. And last but not the least, I would just like to say that this kind of framework, should it not be inclusive and fast, would actually lead and defy the objective of strategic autonomy, because the countries which wouldn't have a chance to use the digital euro would actually turn to using different platforms and non-European platforms, and that would work against the mere objective of the European strategic autonomy, monetary and monetary supremacy on European continent. So in this regard, I'm rather optimistic. I just believe that we should make sure and wait to make sure that the legal hurdle is overcome and that the Parliament adopts the legislation. And I'm absolutely convinced that the ECB will push very strongly forward in the process of implementation and make sure that all the jurisdictions which are aspiring to join are given an opportunity. Thank you.
Thank you so much. It really appears that financial cohesion within the European market remains a priority in the days ahead. I believe that we today highlighted the main initiatives when it comes to payments landscape that are happening within the European Union, and that we have, I would say, the answer on the question, what is the future of money in digital Europe? Thank you so much. Thank you.